fundsupermart.com.
Tell us how you structure your portfolio. Do you prefer a broadly diversified portfolio or a more concentrated one based on fewer best ideas?
I think it's the latter. We prefer to be more concentrated. That's the same as saying we prefer to be more selective. Basically, the structure of portfolio is very much in line with the way we think about the investment process. Finding the good companies, so we'll first of all identify that, so we're selective with regards to that. And then on top of that, we will want to concentrate ourselves in the ones that are riding on the good top-down teams, like China urbanization, as I was telling you about. So, and also cheap valuations. So when it comes out to meeting all these criteria, it narrows down to a very select group of companies at any one time. So in other words, we end up with a concentrated portfolio, and if we don't have that, we're actually not doing our job very well. And in a typical, the Asia-Pac ex-Japan portfolio that we manage, there will be about 50 to 60 stocks in the portfolio.
Can you give us an example of one position that has done well for your portfolio and the basis behind that position?
We don't usually talk about specific stocks to investors, but I can talk about a team that has done very well, and that team has a few stocks that we use to populate and write the team, and these are all pretty good companies. That team is the Taiwan presidential election. As you may recall, back in the fourth quarter last year, people were getting more uncertain as far as who is going to win the presidential election in Taiwan is concerned, whether it's the President Ma from the KMT or is it the DPP that's going to win. And the opinion polls at that time shows that it's going to be a very close fight, and therefore people start getting worried. But opinion polls are opinion polls, and at the end of the day, we would rather trust our own judgment. And my judgment call was that the Taiwanese people are not going to risk the economic ties with China. So what I did was I deliberately took my family on a holiday, on a December year-end holiday to Taiwan, and I was able to speak to people on the ground, be they taxi drivers or tour guides or people whom I meet in the shops. And it confirmed my belief that people are just not going to risk it. And I watched the debate on Taiwanese television as well, the last live debate among the three presidential candidates. And they all did very well, were very articulate, but but President Ma held his own very well. So I could find no reason why people would not vote for him, unless they are very idealistic and firmly believe that independence of Taiwan is more important than anything else. But if they don't hold that position, then I see no reason why the KMT would not win. So in the end, we were proven right. I think when I came back, we bought even more stocks in that space. And this include like property stocks as well as domestic demand names in Taiwan. And true enough, after the KMT won, these stocks did very, very well.
And can you walk us through one team that has not done as well and how you manage that?
Some teams, these are long-term teams. Some are shorter term, but predominantly longer term teams. So over certain periods of time, they may not work very well. Like for example, I have a group of stocks in the portfolio that has a very consistent flow of the dividends to anchor the returns for the portfolio. These include telco companies as well as the REITs. And in the last 2 or 3 months, they have actually underperformed the market. So in such a case where there is a very specific and important role that they play in the portfolio, I will continue to hold them. And from a bottom-up basis, their business is still very strong. So the investment case is still very strong, and we will continue to hold them. However, there are occasions whereby a company did not deliver. And therefore, if the fundamental investment case is no longer valid, then we will sell out of the stock.
Given your outlook, how have you positioned your portfolio to profit from the various investment ideas?
I think basically just sticking to what we do best, and I keep coming back to these three precepts, strong companies, strong growth teams from the top down, as well as cheap valuations. So from time to time, when a company performs and valuations get more expensive, we may actually look for cheaper values elsewhere. So that is one. We continue to look for relative value. We continue to monitor closely how a company is performing in terms of its business operations. If they change their business model, for example, we'll be very concerned, and we will want to re-evaluate them. At the same time, on the growth teams, it's not like you take a China consumer growth team and it's the same stocks forever, because that team the changes as well. It evolves over time. Like for example, the consumer team in China, like 20 years ago, is about selling goods that are affordable to the average Chinese, but the average Chinese is changing all the time. So nowadays there are like a lot of millionaires in China. So there are also this group of the luxury brand companies that are going to do very well, like the maker of BMW cars in China. So we have to constantly monitor how teams evolve, how companies are responding to their challenges in that space, and then modify the portfolio picks to basically write that Asia growth story going forward.